Namaskaram my dear ones, this is Nishanth Reghunath and welcome to a new video from KYDU. In this video, we'll be having an analysis of our intermediate examination from December 2023 term for paper 7 direct and indirect taxation as under syllabus 2022. But please do keep in mind, I'll be only covering direct tax in this particular paper. I'll be doing a separate video for indirect taxation. Alright, so throughout this video, what I expect or what I hope to deliver is a clear-cut analysis of all our questions and their answers and how you should be ideally delivering your answers in your examination. So I had already done a similar video for the same in Malayalam wherein I had made two small mistakes. That's primarily because I didn't read the question and the options given in the answers fully. And it was one account by the name Gaming with Pro and another account by the name Hasina, who I think I pronounced the name right. I think it's Hasina itself. I'm not sure whether it's Hasina or Hasna. But anyway, whoever you are, you know who you are. And I'm very much grateful for the fact that you pointed out the mistakes that I made. So I'll be doing this video without those mistakes. And I hope that the viewers of this video get a really good idea of our questions as in our last term's examination. And this helps you prepare better for your upcoming June 2024 and the whatever exam that you're writing after June 24, December or June 2025 or whatever it is. Alright. So yeah, let's start. So one thing that I want to bring to your attention is whenever you get a question paper, I want you guys to read everything that's written here very carefully. Because I've seen students make horrible mistakes here and I'll point out what the mistakes are once I read through the content given here. The figures in the margin on the right side indicate full marks. Where considered necessary, suitable assumptions may be made and clearly indicated in the answer. See, our paper, this is one area where students make a mistake. See, our paper, direct tax, is a paper wherein you will have to make assumptions. There will be multiple cases wherein you will have to take your own assumptions and interpret it in your answer. And when you are making such an assumptions, make sure it is clearly indicated in your answer. So if it's a calculation wherein you have made an assumption, and if it's a tabular calculation that you're creating, have a column for working notes and mention working note number 1. And in your working notes, show working note number 1, XYZ item, whatever the item is, and list out the assumption that you have made. Or if it's just a single assumption, enumerate or expand or describe whatever assumption that you have made. Make sure you do this. You should not miss this. Now, next important part. Section A. Compulsory. This particular thing, compulsory. Now the reason why I'm highlighting it is because if you go to section B, you will find answer any 5 questions out of the 7 given questions. So just answer any 5 out of the 7 questions that are given, and each of which carries 14 marks. Alright. Now, there can be scenarios wherein this particular note is given at the start of the question paper. It might be mentioned here as all the questions in question number 1. Sorry, it might be mentioned here. Question number 1 is compulsory, and out of question numbers 2 to 9, you can write any 5. So it can be mentioned here as well, instead of it being mentioned here and separately here. So by any chance, if the header of your question paper mentions this and you miss out to read this, what will happen? You'll go to section B and section B will not have this particular statement. You will end up answering everything. Correct. So make sure that you do not make a mistake of this sorts. Okay. Now, right. Let's head to question number 1. So question number 1, multiple choice questions. Just choose the correct alternative. They haven't asked you to state the reason why you chose it, so you just have to choose your alternative. So we see here there is question number 1, then there are sub questions 1, 2, multiple, right? So whenever you have a question like this, whenever you're answering, what I want you to keep in mind is, I need to be super careful about this. See, our answer paper, let's rub this out. I wrote this for the Malayalam version of the same video. So whenever you have your answer paper, it will have a header line stating question number. So you write 1 here. Draw a margin and show 1, 2, 3, 4. If you want, you list out all the 50 numbers. There are 15 questions here, right? List out the 50 numbers, and the 15 numbers might fill up your whole paper. In case you have to do calculations for these questions, take the next page. Next page, give working notes, and first working note for question number 1. Show your answer. Alright, so always make sure you note question number over here and the sub questions in the margin. Don't write 1 here, don't do that. Okay, now if this is a question, say it is question number 4, question number 4. Question number 4 has, say, sub elements like 4a and b. It has 4a and 4b, and 4a has further 1 and 2. If it's like that, draw one margin and another margin. Draw another margin wherein, say, the first margin you show 4a and then you show 4a1 and 4a2. And this is question number 4 itself. Say you finish 4a1 and 4a2 in half a page. Or say you just take, say, 3 or 4 lines. You only take this much of space. You have space to write 4b. You can write 4b here, no problem. Because it's the same question. And say you finished 4b here. You finished 4b here. You finish with the half a page. You finish the whole the whole question, that is question number 4. Do not, I'm so sorry. So yeah, where were we? Yeah, so you finish question number 4 by the half of this paper. Do not start question number 5 in this paper. Do not take a fresh page. No 2 questions answers should come in a single page. No. It can be 4a and b because it's essentially the same question. But it should not be 4 and 5. No, 5 should form part of the next page. Alright, so always keep that in mind. Now, going through these answers. See, as I already said, I had completed the same video for the Malayalam version. Hence, you will see a lot of notations that I've made. But I'll just take you through the complete answer once again, okay? It'll be far more easier this time to do the English video because I have all the calculations done in an Excel file. So check this out. Dr. Rao is a famous physician at Chennai. His gross receipts from profession was 48,40,000. 48,40,000 was his gross receipts for the previous year 22-23. He wants to admit income under the applicable presumptive provision of Income Tax Act 1961. So famous physician, doctor, what is the presumptive taxation? Is it 44 AD, ADA or AE? AD is for businessmen, ADA is for professionals. Isn't Mr. Dr. Rao a professional? So it will be 44 ADA, and as per 44 ADA, your taxable income as per presumptive provisions will be 50% of your receipts, right? But I'm not stopping here since I made a mistake when I didn't read the questions completely for the Malayalam video. I'm just going to read the whole question. How much must be admitted as income on presumptive basis? And you have 4 options. Alright, so I read the complete question. So it's 44 ADA, 50%, and when you calculate 50% of 48 lakh 40, you will get the answer as 24 lakh 20. Next, on the occasion of his birthday, Mr. Sanjay received cash gifts of rupees 60,000 from his relatives, 1 lakh 10 from his friends. How much of the cash gift is liable to tax under the Income Tax Act 1961 for the assessment year 23-24? Alright, so it's the occasion of birthday and there is no particular provision with respect to exemptions for gifts received during birthday. If this had been a wedding, it would be fully exempt. But since it's birthday, no, nothing special. So cancel off birthday. Sanjay received cash gifts of 60,000 from his relatives. Okay, relatives. So we can assume that these are relatives as per the definition of Income Tax Act, and any gift received from relatives is free from tax. And 1 lakh 10 from the friends. So 1 lakh 10 from friends should be definitely taxable because it's from friends. Friends' gifts are not exempted. So how much would be taxable? 1 lakh 10. But just for safety, I'm reading all the answers. No, it's not 120, 170, neither 60. Next. As per section 194I, any person other than individual or HEF is responsible to deduct tax at source on rent to a resident person if the aggregate amount credited or paid during the financial year to the payee exceeds what? So what is the ceiling limit of rent paid or credited in a financial year? If exceeded, 194I is applicable. 2 lakh 40. Next, the aggregate amount of deduction under section 80C, CCC, CCD of the Income Tax Act other than in respect of employer's contribution and 80 CCD 1B shall not exceed. See, we know 80 CCE tells us there is an aggregation for 80C, CCC and CCD. But in CCD, do not take CCD 2, that is the employer's contribution, and CCD 1B, that is the second half of the self-contribution. So no upper limit for these two other than the upper limits given in the respective sections. But for the rest three, they have their upper limits given here, and on top of that, they have an additional upper limit at 80 CCE, and that is 1.5 lakhs. Clear? Next, Madhav is a resident individual. His father is wholly dependent on him and suffering from 90% disability. Madhav has incurred an amount of 85,000 for maintaining and medical treatment of his father. So this is a case of dependent disabled. We have a dependent who is disabled upon us, and the section is 80DD. And I've told you, as in, if you have watched my videos or if you have taken lessons from me, I always take the short form of DD as dependent who is disabled or disabled dependent. And whenever we have a disabled dependent, we can take a deduction in respect of the treatment expenses that we incur for them. It shall either be 75,000 or 1,25,000 depending upon the severity of their disablement. And here it says 90% disability and it's very severe. So you can take a total deduction of 1,25,000 as per 80 section 80DD for the assessment year 23-24. Next. Which of the following is an agricultural income under the Income Tax Act 1961? Chapter number 3, if I am not mistaken. There we have seen a list of items which qualifies as agricultural income and which does not qualify. So here they have given us a list. Item number 1, dividend received from a company engaged in agricultural operations. Absolutely not. This is not agricultural income. This is dividend income taxable. Interest on arrears of rent in respect of agricultural land. No. If this had been rent received from agricultural land, it would have been agricultural income. Interest received by a money lender in the form of agricultural produce. So I am someone who gave money to someone on borrowal basis. So I gave a loan to someone. And the person who took loan from me paid me back his interest in the form of some of his produce. So I got some agriculture, I got a big sack of rice grain as my interest. Can I claim that this is rice grain? Agriculture. My interest is exempt. No, it will be taxable. Interest on capital received by a partner of a firm engaged in agricultural operations. So me and 3 of my friends start a firm and we do agricultural business. So we cultivate, we sell vegetables or whatever it is. We receive salary and we receive interest on capital. This will qualify as an agricultural income. Clear? Next question 7. Now this is the question where I made the mistake, and if I'm right, it was Gaming with Pro. The account Gaming with Pro who noted the mistake that I made. So this is the wrong answer that I marked, and the reason why I made that mistake I'll be elaborating here as well. Interest on capital on loan for wait, there is a small mistake here as well. Interest on capital on loan from partner of a firm is allowed as deduction under section 40B of the Income Tax Act to the extent of. So it's actually interest on capital or loan from a partner is allowed with a ceiling limit. What is the ceiling limit? It's 12%, right? 12% of the deed rate. What happened was I checked option A, 18% of the rate mentioned in partnership deed, whichever is less, 18% or deed rate, whichever is less. Then I saw 12% and I clicked answer here. No, that was not the correct answer. I'll tell you why. It says 12% even if it's not mentioned in partnership deed. No. The actual answer is 12% and this clause or the rate mentioned in partnership deed, whichever is less. This is the right answer. So I missed it. So I saw 12, I clicked it there, I marked the answer right as there and I moved on without reading the rest of the question options. So it's it's C, 12% per annum. So once again, thank you so much Gaming with Pro. GST, I'm not going to touch GST. Now we are going to section B. Answer any 5 out of the 7 questions. I'll answer all the 7 questions for you. I'll answer all the questions from data tax for you. So this is question 2A. Savitri is 48, has following incomes for the previous year 22-23. Rent from property let out in London, salary income Singapore, bank interest in SBI Chennai, dividend from Indian companies, etc. Calculate the gross total income for the assessment year 23-24, assuming that she is an ROR, an RNOR, and NR. Chapter number 2, residential status and scope of income. So we know for sure a resident, ordinarily resident, will be taxable for all the incomes here except for any income from the previous year which is untaxed or not. Sorry, any income from a year before the previous year which is untaxed or not. So here every income is from the previous year itself. So being an ROR, everything will be taxed. But when you are an RNOR and an NR, not all will be taxed. Which all will be taxed? Rent from property in London credited to bank in Singapore. So imagine I'm an RNOR, I have a property in London and the London property gives a rent to my account in Singapore. Nothing to do with India. House in London, received in Singapore. Nothing to do with India. Not taxable for RNOR, definitely not taxable for NR. Salary income in Singapore credited to bank in Chennai. I am an RNOR. I got money. It got credited. It got first received at my bank account in Chennai. So it's an Indian income because the income is received in India. So it's taxable for RNOR and NR, no doubt. Bank interest in respect of fixed deposit with SBI in Chennai. So a non-resident has a fixed deposit in Chennai and RNOR has a fixed deposit in Chennai. You get interest, pay tax. Whoever you are, pay tax because it's an Indian income. Dividend from Indian companies. Again, Indian income taxable for RNOR and NR. Interest on deposit with Indian companies credited to bank outside India. Doesn't matter. Indian companies interest on deposit. Indian income taxable for everyone. Royalty income from United States, USA credited to bank account in Singapore. I have a royalty in USA which is credited to my bank account in Singapore. If I'm a non-resident, why should I pay tax? See, imagine you are here to play IPL. You are here to play ISL. So you are a player from Spain or you're a player from Australia or South Africa. You are in Kerala or sorry, you are in India and you are attending IPL and for this particular period you receive royalty from a company in USA and it goes to your Singapore account. Would it be fair if the Indian government asks this foreign player and tell them, you are in India, you got this dividend income, pay tax here? No, it won't be fair. This is not Indian income, this is a foreign income. As far as foreign incomes are concerned, a non-resident, not an ordinarily non-resident, sorry, resident but not ordinary resident has to pay tax. So, 3 to 5, ROR, RNOR, and NR pays tax. 1 to 6, ROR pays tax, and this is your answer. Sorry. ROR has to pay tax for everything. There's a pen. ROR has to pay tax for everything. RNOR and NR has to pay just tax for items 2 to 5. 2, 3, 4, 5. And this will be your total. And whenever you are writing an answer like this, make sure your heading is super clear. Your heading should be like this: computation of gross total income of Ms. Savitri for the assessment year 23-24. And by super clear, I want you to have 3 elements in your questions heading, answers heading. Number 1, what are you computing? So computation of gross total income. Isn't that what is asked in the question? Isn't that what is asked in the question? Compute gross total income. That should be number 1. Of whom should be next. Of whom? Of whom? Of Ms. Savitri. For when? So what are you computing? Of whom? For when? These 3 things should form part of your answer. Now, please do not leave your answer here. Do not leave your answer here. Your answer should be, let's go back to the question. Question number 1, 2, 3, right? So your answer should be like this. So you write question number 2 and imagine this is the margin A. And A has 1, 2, 3. And here you have the computation. And as per computation, you show this table. And you take this answer, write 17 lakh 20. 9 lakh 20, 9 lakh 20, and if necessary you can mention here as per working shown below. So working is already shown here. So 2A, we will list the subs as in the additional subs and then we show the computation. See how precisely structured your answer is. Usually what students do is they write question number 2 and they show A and draw this table and think that they are done with it. Now it depends upon the person who corrects it. Now if I was the one who was correcting it, I wouldn't take this as an answer because it was clearly mentioned your answer should, your question has 3 parts. 1, 2, 3. Where are the 3 parts? Now I can, out of my goodwill or out of my leniency towards the students, I can consider this as 1. I can consider this as 1. I can consider this as 2. I can consider this as 3. If this had been a typical BCom or MCom question, I wouldn't have had any kind of problem to give you marks for this. But this is a professional exam. You are going to be future CMAs and I want you guys to have that professionalism. So your answer should have that structure as well. 2A, 1, 2, 3. Answer like this. Show the working below and if required, show as per working or computation below. Don't draw the arrow. Shown below. Okay. That's all. Let's head back to the next question. Mr. Sahil, aged 40, let me just erase all this. has given the details of the income from the previous year 22-23. Basic salary, lot of allowance. I'm just rubbing it all out. Here go here. Basic salary, okay, 3 lakh. Education allowance for 2 children, 36. Servant allowance, 10. Entertainment allowance, 6. Medical facility for Mr. Sahil and his family members, okay. Medical facility. Free meals, gift on Deepavali, transport allowance, okay. You are required to calculate the income chargeable to tax under the head salary in hands of Mr. Sahil for the assessment year 23-24. Mr. Sahil does not opt to be taxed under section 115. So he does not want 115 BAC. He wishes to take the old provisions of the Income Tax Act. Now, please be careful here, because from your June 2024 exams, you won't see a line that states does not opt to be taxed under section 115 BAC. It might not be in that structure. I'll be putting up another video where I'll be explaining how to understand the applicability of 115 BAC from a question. So because until last year, until this exam, the applicability was like this. Default, it's your old regime. You have to choose if you want 115 BAC. But right now, it's the right opposite. Default, it is 115 BAC. You have to choose if you want to go out of 115 BAC and get the old regime. So the way they structure the questions will be a bit different. And I'll be explaining that process in my next video. Alright. So probably when you're watching this, you might have that video in my playlist as well. So right. As I've always thought, whenever you have a question from salaries, what you need to do is categorize the items from the question. First, check whether this person has worked for the whole year. So it's for the whole year. It has not mentioned like he joined last year by mid or anything. So no need. So categorize between basic items, allowances, retirement benefits and perquisites. So how many basic items do we have? Just basic salary. How many allowances do we have? Allowance number 1, allowance number... Wait, I'll take another color for this here. Allowance number 1, allowance number 2, allowance number 3, no allowance, no... allowance number 4. 4 allowances are given. Now, how many retirement benefits do we have? None. How many perquisites do we have? 1, 2, 3 perquisites. Yes. Now, take your answer in the same structure. First, write your salary, basic items. Then mention your allowances. Then show your perquisites. And find your gross salary. So, start your answer with 3 lakh. That's your basic salary. Then go to allowances. So, first write educational allowance. You know, educational allowance gets an exemption. Correct? 100 per month per child. If you're taking the old regime. Then servant allowance, entertainment allowance, fully taxable. Transport allowance, which is for residents to place of work, would have received an exemption if this person, Mr. Sahil, was disabled or had any form of physical disability. But here nothing is mentioned, so fully taxable. So basic salary we'll mention. So basic salary is mentioned as 3 lakh. And see, before we go to the answer, see how I've structured it. So computation of what? Of whom? For when? Particulars, notes, amount in rupees. Basic salary in the outer column. Educational allowance, 36,000 minus exemption, 100 per month per child. So 2 children. So 100 into 12 into 2. So 2,400 outer column. Servant allowance, fully taxable. Entertainment allowance, fully taxable. Transport allowance, 12,000, no exemption here. So fully taxable. So it's not necessary that you show this. It's not necessary to show this. Okay. Now, moving on to perquisites. Medical facility for Mr. Sahil and his family members in a hospital maintained by the employer. See, we have learned in salary that if the employer gives any sort of medical facility as mentioned next. Number 1, medical insurance. Number 2, medical treatment in a government hospital. Number 3, medical treatment in a hospital as approved by the Commissioner of Income Tax. Number 4, medical treatment in a facility maintained by the employer. That is the employer's own hospital. If an employer gives any of these 4 things that I mentioned, then it's fully free for the employee and their family members. So Mr. Sahil and his family members got treatment in the employer's own hospital for 18,000. This does not have to be taxed. But say imagine if it's mentioned in a private hospital. It said it's in a private hospital, 18,000. Will it be taxed or not? If it's a private hospital, it has to be approved by Commissioner of Income Tax Act to be not taxable. Correct. So you need to get the approval of the Income Tax Department. And it's not mentioned in the question. So you have to take an assumption. You write taxable 18,000, you write the amount 18,000 or nil. So what are you writing? Give an assumption. So if you are writing nil, put working note number 1 there, and show. Medical facility given at the private hospital is assumed to be not approved. So it's approved, so not taxable. See, medical facility 1, medical facility and treatment given by employer in a hospital maintained by the employer is free from tax. So here is the same hospital given by the employer. Sorry, medical facility owned by the same employer. But if it was other way around, it was not mentioned, it was employer's hospital, it's rather a private hospital, then you show 1. Whatever your answer is, you are showing in our computation, you give the necessary explanation as well. Next, free meals during the office hours, 18 to 300. So 80 rupees meals for 300 days was given 24,000. We know as per the old regime, meals up to rupees 50 is exempt. So 300 into 50 is exempt, only the balance is taxable. So free meals, 24,000 was given, and 300 into 50, 15,000 is exempt, and take the amount to the outer column. 24 minus 15, 9,000. Alright, so this inner column is for all the items which requires a calculation. Okay, next, gift wristwatch on Deepavali, 7,000. We know gift given by an employer to employee in kind is taxable when it exceeds rupees 5,000. So here it's 7,000. You can either tax the whole 7,000 or tax whatever exceeds 5,000. So what exceeds 5,000? 2,000 exceeds, right? So you can either take 7 or 2 here. It's up to you. You can write an assumption for the same as well. We are considering it as fully taxable. So gross salary 377 and the amount is 7. Then there is entertainment allowance here, right? Then we are going to deductions under section 16. I'm going to show section 16 deductions. 3 items, standard deduction under 1A, entertainment allowance in 2, and professional tax paid in 3. You do not have professional tax here, but I did read entertainment allowance here. Can this person take deduction for entertainment allowance? No, because this person is not in a government company, is in a private company. Government employees can take deduction for entertainment allowance. Correct. So only deduction is standard deduction. 50,000 is deducted and taxable salary is 327,600. But say if you had taken, 2,000 here, you had taken 2,000 here instead of 7,000, your answer would be 322,600. That's all. That's all. As simple as that. Clear? Yes. Now let's move on to the next question. That is 3A. This is a question from house property. So it says Mr. Gaurav owns a house property in Jaipur, Rajasthan. The fair rental per annum is 1,50,000 and the municipal value is 1,30,000. So we are given the fair rental value and the municipal value. We take this for computing GAV. The house was let out from 1st April 2022 to 30th September 2022 at a monthly rent of 5,000. And from 1st October, Mr. Gaurav occupies it for his residence, self-residence. Okay. So throughout the previous year, a certain set of months, that is from April, May, June, July, August, September, 6 months it was let out, 6 months it was self-occupied. So partly let out, partly self-occupied. But since this is a bifurcation based on time, we will consider the house property to be fully let out for the whole year and make adjustments at the actual rent receivable while finding GAV. Following expenditures were incurred on property and paid during the previous year. Where is my pen? Yeah. Paid during the previous year. What are the expenses? Municipal tax, land revenue, fire insurance premium. We know for sure these two things are not allowed as deductions in house property. So take them out. We do not need it. Municipal tax definitely be deducted while finding NAV. The loan for the construction of the property was taken. The loan for the construction of the property is taken and interest charged by the bank is 12,500 and has been paid. Interest has been paid at 12,500 for interest on capital borrowed. Section 24B. To repay the loan, Mr. Gaurav has taken a fresh loan and interest charged on this loan is 6,500. Even this interest is deductible. So as per the rules of section 24B, it said, if you have interest on loan for a house property loan, you can deduct it. You necessarily don't have to pay it. Even if it's payable, you can deduct. Now, if you had to take another loan for paying off this loan and you are paying interest for another loan, that is a supporting loan, you can take the interest of the supporting loan as well. So here you can take 12,500 and 6,500 totaling to 19K. Mr. Gaurav does not opt to be taxed under 115 BAC. Compute income from house property chargeable in the hands of Mr. Gaurav for the assessment year 23-24. Simple calculation. First we find out GAV with 150, 130 and 5,000 for 6 months. Yes, then we find NAV by deducting municipal tax, standard deduction and interest on capital borrowed. Standard deduction 30%, interest on capital borrowed at 19K. Simple stuff. I'll show you how to do this in the most effective way. So whenever you have such a question, what you need to do is, see, what are you computing? Computing income from house property, right? So computation of what? Income from house property of whom? Mr. Gaurav for the assessment year. Mention the year. So when you are giving the heading stating computation of income from house property, the last item of the answer should be income from house property. And always, it's better to have the GAV calculation as a working note. It's not necessary that you have to have it as a working note, but it's better, according to me. So from the question, I do not know this. I need to find out this. I do know this. I can straight away write it from the question. I don't know what standard deduction is. Standard deduction 30% of 1,37,000. I know interest on capital is 19,000. So these two things I've highlighted in yellow, I can right away write from the question. Now I just need one thing, that is GAV. With GAV, I'll get this, I'll get this, I'll get this, I'll get this. Correct? So all I have to find is GAV. So working note 1, I'm finding GAV. Computation of GAV, we have municipal value 150, fair value 130. So we take the higher, that is 150. Then 5,000 for 6 months, that is 30. So 50 and 30, 1,50,000 and 30. The higher is GAV. So 1,50,000 is a GAV. 1,50,000 I put over here. 1,50,000 minus 30 and 1,37,000. It's 30%. 41,100, 19,000, 41,100 plus 19,000, 6,100, 6,100 from 13, 1,37,000 deducted. You'll get 76,900 as your final answer. Simple. Nothing much happening, right? Nothing much happening. The only thing that you need to be careful of is interest on capital borrowed. You can take it for your primary loan. And also if you have taken another loan for supporting your primary loan, that interest, the interest applicable for your supportive loan also can be taken. Right, now going on to the next question. Mr. Gopal is a proprietor of business. Following is his profit and loss account for the year ended 31/3/2023. Probably PGBP. Yeah, that's a PGBP question. A lot of items are given. So let me just take out the drawings and the notations that are made. Okay, so taking it all out. Okay. Right. So P&L is given. A lot of items are given. Let's see what they have asked us to find out. Compute income under head business and profession. So profits on compute your business income. Compute Mr. Gopal's business income. That's what they have asked. No need of 115 BAC. No need of 115 BAC. Alright. Yeah. So whenever you get a question like this, wherein you are given a statement of P&L, you know your answer will start from net profit. This net profit with a set of adjustments will give you your answer. Correct? So what are the adjustments that you have to make? Let's head to the P&L. Sorry, our answer. So your adjustments you have to make are, number 1, you take your net profit. Take your net profit less any incomes other than PGBP. Go to the credit side of your P&L and see if there are any incomes that should not have been part of your PGBP income. Take it out, less. Now check your expense side and see if you have taken any expenses that shouldn't have been part of PGBP expense. So if you took an expense unnecessarily, what happens? Your expense is higher, your profit is lower. Because of that expense, right? Your expense is higher, your profit is lower. So your profit and profit is lower. So we need to add it back to make it higher. Any expenses which was allowed but not taken. This was allowed and you didn't take. As in you could have deducted this. So deduct it. Any income that you did not take. This should have been an income and you didn't take. That is, your profit should have been higher with this added income. So add it. So these are adjustments that we have to make. And it's always simple to go to the credit side first and check for incomes other than PGBP. Check the question. Gross profit. This is part of business. This is PGBP. Is rent from property business income? No. Rent from property is house property income. This is go to section 22. Income from house property. Then interest on government securities. You got income from government securities. This is not business income. This is IFOS. Section 56. So 2 incomes, not PGBP. Take them out. Take them out. So you start your answer. You start your answer with your net profit. First adjustment, taking out incomes other than PGBP. So net profit as per P&L. So you have your net profit as per P&L. From that you take out incomes other than PGBP, government security interest and house property rent. Take it out. Now, second adjustment. Add any inadmissible expenses. This is the tricky part. Go to the expense and see if there are any expenses which shouldn't have been part of your answer. Establishment charges. Yeah, can be part of business expenses. Rent rates and taxes. No problem. Sundry expenses is part. Household expense. Is this part of business? No. We need to add this back. Also, one more thing. By no means you are supposed to indicate anything in your question paper. Do not do what I'm doing right now. Do not write anything in the question paper. Leave your question paper as it is. Don't even think about just giving at least a tick or an into mark in your question paper. That's not supposed to be done. In case the person who's invigilating your classroom finds this, they can actually qualify you as someone who did malpractice for examination. So don't do this. Alright. So provision for bad debts, household expenses, not part of business expense, add it back. Provision for bad debts, we know no provision is allowed, add it back. Loss on sale of motor car, no, this is not business expense, add it back, because especially, and it's also given as use for private purpose, no. Salaries, okay, so 1,880, 1,200, 1,800, three of them to be added back. 1,880, 1,200 and 1,800. Motor car loss, provision for bad debts, house debts loss, okay, we added those three. Salaries, okay, fine, salaries, paying salaries for employees is fine, correct. So salaries is fine. Insurance premium, including life insurance, okay. There's a total of 2,880 the business paid insurance, but out of which 1,790 was for insuring the life of Mr. Gopal. That is personal expense, not business expense. You shouldn't have taken it. Add back 1,790. Add back 1,790. Next, provision for depreciation. Absolutely not. Interest on bank loan. Okay, interest on bank loan, yeah, business takes in bank loans, interest has to be paid, no problem. But provision for depreciation, absolutely not. Depreciation, yes. Provision for depreciation, no. Add back 6,400. Okay. So we found out everything that is to be added back. Now let's check the adjustments. Bad debts written off during the year. This is an expense that was not taken. That is as per the third category. It is an admissible expense but not taken. So we can deduct it. Admissible depreciation as per income tax rules. So bad debts written off 650 was something that we could have taken but we did not take. Admissible depreciation is something that we could have taken but we did not take, so we can take it. We can take it means we can charge it as an expense, that is bring our profit lower, so deduct it. The assessee is running his business in a rented property, half of which is used by him for his own residence. So assessee has a building, out of which this is self-occupation, this is business. Rent of 2,400 in respect to the whole house. Okay, so he's paying 2,400 for the whole house, 2,400. So the whole, shabby handwriting, let me clear it up. 2,400 is for the whole house. So 1,200 for the business area, 1,200 for the self-occupied area. And the balance 500 is what? Balance 500 is on account of municipal tax paid for property given on rent. Wait. I'll take you to the item. See, this rent rates and taxes 2,900 is 1,200 rent for business, 1,200 for house self-occupied, 500 is for municipal taxes of property given on rent, is for this property. So this 500 is not PGBB item, it is house property item. So 500 has to be added back. This 1,200 of the self-occupied house, this 1,200 self-occupied house is a personal expense, not PGBP expense. It has to be added back. So out of 2,900, only 1,200 is allowed. 1,200 is allowed. The balance 1,700 is not allowed. Correct? 1,700 is not allowed as an expense. We should add it back. 1,700 is not allowed as an expense. We add it back. Yes. Now we know bad debts written off 650 can be deducted. Depreciation 1,600 can be deducted. Yes, we saw that from the adjustments, right? So that's all. We checked all the adjustments. We checked everything. Pretty simple question. We checked everything. Nothing much. So as per everything that we have noted, it's 1,80,150 minus 10,750 plus 14,770 minus 2,250. You'll get your income from business as 1,81,920. That's all. That's all. And one more thing that I left out. Every time there's a very safe thing that you can do. After you get the tabulated answer, you can write a line item. The income from business of Mr. Gopal for the previous year 23-24 or 22-23 is rupees 1,81,920. And always remember to denote the rupee sign, whether you are writing it in actuals or in lakhs or whatever it is, to denote it right above your table. So ideally you can leave a line here, sorry, other way around. Line here and write the rupee sign right below the heading but above your table. Alright, yeah, that's it. So that is 3B. Now let's go to question 4A. Capital gains. Very simple question. Now capital gains is also just like house property. Your answer will have just a set of items, and the set of items are, once again, full value consideration, less any expenses on transfer, you get net consideration, less cost of acquisition or index cost of acquisition, less cost of improvement or index cost of improvement, capital gains or capital loss. If it's capital gains, any deduction from section 54 to 54 GB, taxable capital gains. So simple table and your answer is done. So all we need are full value consideration, any expenses on transfer, cost of acquisition, cost of improvement, and when you deduct all this, you get capital gain or capital loss. And if any deduction is applicable under 54 to 54 GB, that's it, taxable capital gain. So item 1, 2, 3, 4, 5 items. That's all that you need for a capital gain question. So let's check this question. All right. So quickly taking off everything that I've indicated here. Yeah. Mr. Manoj, a resident individual who's retired from employment on March 2022. He sold his residential building for 60 lakhs to Zeek Limited, Delhi. So sold. So I'm indicating your full value consideration items in blue. Sold on 3rd February 2023. Okay. Mr. Manoj paid 2% commission on sale price. Okay, so he paid commission on sale. So expenses on sale, 2% on 60 lakhs. The building was inherited by him as per the will. Oh, so you got this for free. So cost of acquisition is free. You got it for free. On 5th April 2000 from your mother. She acquired the building on 18th October 1990 for 1 lakh. No, she got it for 1 lakh in 18th October 1990. So whenever you get it for free, what should you do? When you do not have a cost of acquisition, you should take the cost of acquisition to the previous owner. So who's the previous owner? Your mother is Mr. Manoj's mother is the previous owner. And what is the value? 1 lakh. But then there's a small problem. This value is from 1990. What is the problem? You cannot index a value before 2001. Correct? So whenever you have a value before 1990, what you need to do is take that value. Check in the question whether you have the fair market value of the year 2001. If you have that, compare, take a year. So next line says, the fair market value of the building on 1st April 2001 was 5 lakh. So you compare this two and take a year. So what will you take? You will take 5 lakh as your cost of acquisition and index from 2001. Now next. Stamp duty value of the building on the date of sale was 70 lakh. Stamp duty value. This is regarding full value consideration. So I'm coloring it as blue. Okay. Earlier, Mr. Manoj had entered into an agreement with Mr. Ram in August 2022 for sale of the same building and forfeited advance money of 2 lakhs. Wow. Okay. So before the year previous, Mr. Manoj got an agreement with one Mr. Ram who said he will buy the property. Ram gave a 2 lakh advance, but the deal was not closed. The deal was not completed. So Mr. Manoj said, you gave me advance and you said you would buy. No, you're not buying. I'm not giving you back your advance. So I'll keep this as my income. Okay, I'm not giving this to you. My question, is this income capital gains? For capital gains to be there needs to be a capital property. Sorry, capital asset. There's a house. It should be transferred. Is it transferred here? No. So this will not be capital gains tax. This will not come under capital gains. Where will this go? This will go to income from other sources. Now, years back, I think it was in the year 2015, the change was made. This used to be a part of capital gains income, wherein an adjustment was made with cost of acquisition. So you do not have to be bothered about it. But right now, this 2 lakh will be the income of Mr. Manoj, but in income from other sources. Now later on, he purchased a residential apartment in Madurai for 30 lakhs. He purchased a new flat in Madurai for 30 lakhs on 20th March 2023. So before the year completed, this guy bought a new flat. Okay, so he sold the property when? 3rd February 23, he sold. Now before the year closed, he bought a new flat for 30 lakhs and subscribed to REC capital bonds 20 lakhs in November 2023. Okay, wait. Let me just change the color in which I highlighted this. Because this is for deduction. Deduction I'll highlight in pink. So deduction under section 54, you have 30 lakhs. You got a new house. And subscribe to REC capital bonds for 20 lakhs. 54 easy for how much? 20 lakhs. What? November 2023. See, there's a rule as per section 54 EC. You need to make the investment within 6 months from the date of transfer. So date of transfer is 3rd February, right? 6 months is March, April, May, June, July, August. August 3rd. Now when was this done? This was done in November 2023. So do you think 54 EC is applicable? Not applicable. So we got everything right. We got blue, we got cream, we got green, and we got pink. So we can do the answer. No cost of improvement. So this is not needed. So we can find everything. So what is our full value consideration? So check blue. 60 lakhs and 70 lakhs. So stamp duty value is 70. Your sale value is 60. Whenever stamp duty is higher than sale value, the income tax will definitely think you purposefully reduce your sale value to reduce your tax. Now, what you need to do, so when your stamp duty value is greater than full value or your sale value, find out your 110% of sale value. So what is 110% of 60? It is plus 10% will give you 66 lakhs. Now still 66 is less than 70, right? 66 is less than 70. So you take 70. So 66 is less than 70. So you still take 70. Clear? So whenever you have a case where your stamp value is higher than your sale value, take the 10% extra and find out 110% of your sale value. If the 110% of sale value is lesser than your stamp value, then you take your stamp value itself. Okay? This is section 50C. So as per section 50C, your stamp value is to be taken as FVC. Right? Then you have 2% of 60 lakhs as expenses on transfer. Your cost of acquisition is 5 lakh, which you index with these figures. Correct? Then your deduction is just 30 lakhs. Your answer is complete. Let's go to the answer. So your full value consideration is 70 lakhs. I've shown notes here and I've shown it here. FVC is 70 lakhs as per section 50C. Yes, why? 70 compared with 60 into 110%. That is 70 compared with 66. Still 70 is higher, so you take 70. Clear? But see, imagine your sale value is 65 and stamp duty of 70. What will you compare? 70 compared with 65 is 110%. So 65 110% will be this plus 6.5 lakhs. It will be 71.5 lakhs. So this time not stamp duty. This is higher. When this is higher, you will take 65. Just leave it. Here it's 70 lakhs. Then you have 2% of 60 lakhs as your expenses on transfer. 68 lakh 80. Your indexed cost of acquisition is working note number 2. That is 5 lakh. 5 lakh is your cost of acquisition, for which I have shown the working note. Why we took 5 lakh? What is the reason why we took 5 lakh? The actual cost incurred by mother was 1. That is before 2001. You take the value on 2001 and take the higher. Now 5 lakh into 331 divided by 100. Aren't that the index values? Yeah. 331 and 100. Why did it zoom out? Some sort of glitch. Okay, no problem. I'll sort it. So for 5 lakh into 331 by 100 will give you 16,550. So that will give your cost of acquisition as 616,550,000. Deducted, you get your long-term capital gain as 522,500. Deduction second 5430 lakhs. Deduction under 54 EC3, working note 3, you cannot get it. Why you cannot get it? It's because it's after 6 months. Yes, so you can't get anything there. So 0, taxable LTCG, 22,25,000. And that's your answer for question 4A. Now let's move on to question 4B. Simple case. Let me just remove all the ink here. Okay. I made a small mistake in this question as well. Even though I am like not 100% sure whether the mistake that I made is actually a mistake, because the clarification that has been received for this particular mistake, if you Google it, you can find out the law is not that clear. Okay, so I'll explain what the mistake is with this question. So here Ms. Sonali submits income from the following transactions. You are required to find out income from other sources for Ms. Sonali. So interest on post office savings bank single account 2,500. We know as per section 1015, you get an exemption of 3,500 for a single account. So this 2,500 has an exemption of 3,500. This is fully gone. Winnings from lottery, net 28,840. This is IFOS, but 28,840 is not the answer. 28,840 divided by 70%, because this is after 30% TDS. So I reckon correctly it's 41,200. Received a motor car as gift from friend on the occasion of a birthday. Gift received on birthday is taxable, but motor car is not taxable per se, because motor car does not form part of movable property. So we know gift can be cash, movable property, removable property. Motor car is not cash, motor car is not immovable property. Motor car can be movable property, but the definition of movable property does not include motor car. So the 6 lakh doesn't have to come there. Cash of 15,000 from each of our friends, 60 taxable, so 60 taxable. Income from undisclosed sources, it's like money which has not been disclosed, so this is supposed to be taxable. Rent received from subletting of house property, 30,000. 30,000 we received, out of which 20,000 was expense. So 8,000 taken away. Sorry, 30,000, 22,000 taken away, 8,000 is our income. So 60 plus for 40 is 1 lakh, 1 lakh 10, 1 lakh 11, 200 plus 8, 1 lakh 90, 200 is your answer. Pretty much simple, right? There is nothing much happening here. See, in the Malayalam video I did, I took the 6 lakh as well and my answer was 719,200. And I tried finding the right answer for the same, and when I googled and when I asked my friends who are CMAs and CAs, I was able to reach the conclusion that motor car is not to be taxed because we are working for the benefit of our clients, our SSEs, the taxpayers. So the definition is not clear whether motor car is to be included, so it may not be taxed. It may not be. Next, Mr. Deepak has derived the following income or loss as computed below for the previous year 22-23. Lot of incomes are mentioned here. You are required to find out the total income of Mr. Deepak for the year 2023. State clearly showing the manner of set-off and the items eligible for carry forward. He filed income tax return for every year before the due date. He does not opt to be taxed under 115 BAC. Alright. Just a simple question of set-off and carry forward. Okay. Income from agricultural business is a loss of 1 lakh, but then this is not to be considered. Ignore. Why? This is an exempt income, section 10(1), so no need. Income from let out house property, 2 lakhs definitely, but 2 lakh 20 definitely, but only 2 lakhs is allowed to be set off, 20,000 carry forward. Income from speculation business, okay, 972. Income from non-speculation loss, 2 lakh 50, okay. Income from car race, 1 lakh 80, good. Loss from activity or maintaining race was 70. Now this particular loss cannot be set off. Why cannot it be set off? Because this is a loss which can only be set off with the same income. We do not have an income of owning and maintaining racehorse, right? So this we carry forward. So carry forward 70 and 20. Instantly we got a carry forward of 90. Then what is our only income? Our two incomes are 972 and 1 lakh 80. From 972 we can take off this 2 lakh 50. From speculation business income we can take off non-speculation loss. So 9 lakh 72 minus 2 lakh 50 we can do. And this house property loss of 2 lakh can also be set off. Answer. 9 lakhs into is the income. Yeah, from that 9 lakhs into we can take off the non-speculation business set off. So what I've done here is I've taken clear this table computation of total income. First I've shown PGBP income, out of which I'm showing the speculation income of 9 lakhs into speculation business, normal business loss set off 2 lakh 50, house property set off maximum allowed 2 lakh. So we are taking these two off from 9 lakhs 72, so we get 5 lakh 22. We have car race income, this is IFO's income, 1 lakh 80. So our total income is this. Now the loss that we cannot set off and we are carry forward are house property, there's a 20,000, and race horse loss is 70, so 70 plus 20 90. Carry forward loss 90. Total income for the year 7 lakh 2. That's all. Now moving on to the last question. Mrs. Jyoti, aged 46, resident individual, furnishes the following particulars for the previous year 22-23. Salary gross 950, loss from self-occupied property 240, interest on savings bank account 12, deposit in PPF 1 lakh 50, dividend from Indian companies 50, LIC premium paid for father dependent 30,000. You are required to calculate total taxable income. So let's check the income items here. We have salary, so this is income, this is salaries. Interest on savings deposit, this is income, this is IFOS. Dividend from Indian companies, IFOS. This is ATC deduction. This is set off loss, but only up to 2 lakh, 40,000 carry forward. LIC premium paid for father. This is as per ATC, you cannot take father's LIC premium. This is not allowed. Ignore. Okay. If this had been for children, yeah, could have definitely taken a dependent sons. P and LIC premium we could have taken as a deduction. But fathers, no, even if they are dependent, no. But if this had been medical insurance, you could have taken for father. So our incomes are salary and interest on savings bank and dividend from Indian companies. Now, interest on savings bank is 12,000. This actually has a deduction under ATTTA because savings bank interest has a deduction of ATTTA. So income, 3 incomes, that is 950. That is gross, out of which we need to take standard deduction of 50 out. Then interest on savings bank 12 and dividend from Indian companies 50. So we'll show the three incomes. Salary. Oh, what have they asked me? You are required to calculate total income and advise her whether she should opt alternative or not. Okay. Should she take 115 BSc or not? So first we'll do by normal. As in, not 115 BSc. Salary 9 lakh. Why is salary 9 lakh? Salary is 9 lakh because it is 950 minus standard deduction of 9. So ideally you can show working note here and working note 1 you can show that. Loss from house property can be set off here. Yes, definitely. Then we have interest on savings bank. Okay, I could have added it. Sell here or no, I think it's understood. The reason I said I could have added a sell here is because from this salary I can take out this loss and show net salary, or just show 9 lakh as the 7 lakh as the income. The interest on savings bank 12, dividend 50. So total income is 7 plus 12 plus 50, 762. From which ATC deduction you have 150, that is PPF. ATTTA for this 12,000 you can like 10. Now we deduct 150 and 10 from that, you get 6 lakh 2. For 6 lakh 2, the tax liability will be 0 to 2.5, 2.5 to 5, 5 to 10 and 10 and upwards. You know the rules. 32,900 plus cess 4%, done. Now the new regime, as in 115 BSc, salary 9 lakhs. That's not a problem. Salary 9 lakhs. And loss from house property cannot be set off. Loss from house property cannot be set off under 115 BSc. Interest, dividend from Indian companies, yes. No deduction ATC or ATTTA under section 115 BSc. So this is our income. Now taxability is 0 to 3, 3 to 6, 6 to 9, 9 to 12, 12 to 15, 15 and upwards. I've done the whole calculation here. It's pretty much simple. 0 to 3 nothing will come. 3 to 6 5%, so 3 15k. 6 to 9 10%, 30k. Then 9 to 9.62 15%, so 9.3k. So 15 45 45 plus 9.3 will give you 54.3 cess, and your total tax liability will be 56,470. So which one should you take? You should take the old regime, obviously. Clear? That's all. So with that, we have come to the answer of the final question. 34216 is the answer that you shared, and I advise Miss Gauri, whoever it is. Miss Jyoti, I advise Miss Jyoti to take the old regime, go by the old system. Don't take the default 115 BSc, go by the old system because you are paying less tax right now. So that's it for this video. I'll see you soon with another one wherein I'll give you different content, whatever that you require. If there is any particular request that you need, and if I can fulfill it, please do let me know. I'll try my best to get a video done for your requests. And in case you have any doubt, you have any kind of clarifications that you require, please check the number that I've given in the description, or you can email me. I've given all the details in the description. Use them, contact me. I will attend to your queries and your doubts on priority basis as and when I get the time. So yeah, that's all. Hoping to see you soon in another video. Till then, tata, take care and goodbye. This is Nishanth Reghunath signing off and wishing you the very best for your upcoming exams. Bye-bye.